I wish I could tell you that every trade that I ever took was extremely smart, but it wasn't. I once lost about $75,000 trading because I misunderstood one tool, and that was the volume profile. And you heard me right. My biggest strength right now was my biggest challenge at one point of the time. It wasn't because of bad luck, it was because I was making mistakes that every trader makes with this particular tool. Today I'm going to break down those mistakes, show you my charts, show you exactly where I went wrong, and most importantly, how you can save yourself from this mistake. So before we get started, let me quickly explain it to you guys. What are the different kinds of volume profile and how do you read them? So there are different volume profiles. First of them, this is called as FRVP. Then on the right hand side, what you guys see is called as VRVP. Then you also have your normal volume indicators and other profiles that you can be using. I personally like to rely a lot on FRVP, and that's the reason why I'll be talking mostly about it. So if you guys want to learn more about this volume profiles, I've created a dedicated video which you guys can find it on our YouTube channel. I'll link them in the description and you guys can watch it there. So let's get started. First of all, what do you guys see here is a fixed range volume profile used in a sort of a range. Yeah, we are not assuming what's a range, what's a trend or anything like that. We're just trying to understand what is this profile and how does it help you. So right here you've got three different levels. First one is your volume area high or your value area high. Second is your point of control. The red line here is your point of control, and third one is volume area low. So this is the tool and it gives you certain kind of level which you can use for trading. So this is what a normal FRVP profile looks like. So now let me quickly explain it to you guys. What were the mistakes that I made with this particular tool so that you guys can stay safe and I can help you understand it better so that you guys can make a lot of money out of it as well. So let's get started. So the very first mistake, that was the reason why I lost almost $75,000 in the market, was using this particular level that you guys just saw. All these levels that FRVP gave me, I was using it simply as a support resistance level without any context, without any understanding. So that was the biggest reason why I lost a lot of money. So just to explain it to you guys here, what used to happen was price was dumping. And as soon as it came back to the point of control level, I would usually just blindly short it, assuming that okay, we have a great market structure and all those random things. But that was not the reality. If you just try to look at the chart here, what you get to see was market did make a great high, market did make a great low. Anything in between this high and low is just an internal structure. It's not a trend. It is not something which is extremely important that will decide the trend of the market. And for that reason, I was blindly looking at the smaller time frame and just trying to randomly short and long on this particular levels, assuming that they were a good support or resistance. So that was the biggest mistake that I made, just blindly trusting this level as a level of support and resistance, and that made me lose a lot of money. So that was mistake number one. I told you about the mistake, but why was it wrong? Now if you guys see, let's talk about the point of control level. When you see this particular level, what it shows you is where the maximum interest is. That does not mean just because the maximum interest is at that particular level, it is going to give you a reversal. It might act as a fuel for a trend reversal as well, for a continuation as well. That is absolutely possible. So for you to stay away from this kind of mistakes, it's very, very important that you understand the whole context of the market and not just blindly trust a level to act as a support and resistance. So now we've understood the mistake. We've understood why it was wrong. But what's the fix? How do you not make this mistake? So for that, it's pretty simple. All you have to do is look at the bigger time frame, look if the market was trending, and if any price action that you are expecting to be a trend, is it actually a trend, or is it just a continuation, or is it just an internal market structure? Now what is an internal market structure and why is it important for you to understand all of those things? I've explained them in detail about market structure, price action. The link to that particular video will also be in the description. So after you finish this video, you can probably check it out. It will help you a lot with your price action and market structure understanding. So once you align this point of control level with certain other key levels and understand the context of the market, if this is actually a downtrend, or are you just expecting something to happen just because you want to trade in? So this is the easy fix for this problem. This will help you a lot and will also help you to not lose a lot of money by getting trapped in some manipulation kind of move, which actually wasn't even a manipulation. You just assumed that something might happen, which did not happen. So that was mistake number one. Now let's move to the mistake number two. This is something which is not at all talked about in the whole community. That's because not a lot of people are using FRVP. Not a lot of people are giving importance to the volume profile. But in the end, it's very important because it's the volume that is pushing the price from point A till point B. As a trader, your objective is to enter at point A and exit at point B. That is exactly what you want to do, right? So for that, you have to understand where the maximum volume is, and if there is an area where there's not a lot of volume. And yeah, it's very important as well to find out where the least amount of volume is. So those area where there is a least amount of volume, it is called as low volume node. So if I just have to give you an example, let's say this is a range where I marked my FRVP tool. Right now you guys can see that there are some extremely high volume spikes. So you see this area has a great volume spike. This area has a great volume spike. But then there are certain areas where you see the volume was extremely low. This area, the volume went extremely low. This area, volume went extremely low. Now this gives you an understanding that even though the market was pumping or dumping or whatever the price action was, but then there are certain areas where you did not get to see any kind of reaction because there was extremely low volume. Now in scenarios like this, you have to make sure that you give this importance, you mark it on your chart, because most of the time those area will become a strong area of support and resistance, because again, low volume nodes are basically imbalance in the market and market can never move on imbalances. So if you mark this area as an imbalance and take it towards the right side, that is exactly where the market has took a pause. If you just notice that the market was pumping literally in a one-way push, it kept on pumping, but the exact point where it took a halt was where you have least amount of volume. Not most amount of volume, but least amount of volume. So it's very important to understand and mark these levels on your chart as well. Now, how did this make me lose money? That's because every time when I got a great entry, let's say I took a long trade here. Alright, so this is going to be my entry. This was my stop loss. And I was targeting, let's say, previous highs. The trade was great. The entry, amazing. Risk to reward, perfect. But if you just look at this is exactly the area where I could have messed up. Like if you look at this, there was a great resistance. There was a low volume node. And just because I took the trade, I saw that the market started to move in my favor. I would have ignored this low volume node, or probably I would have not even marked it. And then the market would have reversed right from there. So probably I would have took some TP, and after that, I would have give back all the profit that I would have made on this trade. So it's very important that you understand the importance of the areas where there is least amount of volume as well, because the market makers will get the price there, fill in their orders, and then make that imbalance convert into a balance. So that is how the market works. So it's important that you start understanding imbalances as well. So that was my mistake number 2. Now let's get to my mistake number 3, which was misreading volume area high and volume area low level. So when I mark my FRVP, this blue line on the top and the bottom are basically volume area high and volume area low. So the mistake that I made, I was reading them incorrectly. I mean, they did give me an understanding that, okay, this is where the maximum volume is in around this whole range. Or if it was a trend, then in that particular trend. But my entries and exits were extremely biased, because I thought that, okay, this is the area where we've got maximum amount of volume and the market has to give you some kind of reaction right from there. But that was not the reality. The mistake that I made was always treating this level as support and resistance just because there was volume. But that's not how it works. All of this level that you see on your chart are basically supposed to act as a staircase for you, as certain kind of steps. So if the market has to keep on going higher, it won't just keep on pushing one way. It will always go higher, backtest your volume area low. It will go higher, backtest your POC. It will go higher and backtest your volume area high. That is how the price might keep on pushing higher. But just because I assume that these levels are going to be support and resistance, every time when we came around this area, I would have went short and got stopped out. I would have shorted here and would have got stopped out. Again, I would have went short here and got stopped out. So just because you see certain kind of levels, you do not have to always trade them until unless there is a strong confidence to add to that particular trade. The fix to this particular problem was always waiting for a bigger time frame candle to close in my favor. If I saw that the volume was drying up, if I saw that the money flow was exiting the market, if I saw that the open interest probably was going lower. I mean, all of these terms, you might feel that, okay, these are some advanced terms. What is money flow? What is open interest? And all of those things. If you guys join the live stream that I do daily, you can understand all about them for free. You don't have to pay anything. All you have to do is just be a part of this channel. Make sure to like this video, make sure to subscribe to this channel, and you join the live stream that I do daily so that you can understand all these advanced terms of trading for absolutely free. So right here, what I started to do was always wait for the bigger time frame candles to close in my favor. And once I saw a strong confirmation, only then I would have took the trade. If not, I was fine waiting on the sidelines. Now let's talk about the fourth mistake that I made with this volume profile, and that was not aligning the price action with the bigger time frame. That was something that I learned the hard way, because again, I lost a lot of money in my initial trading phase. But I would say all of those money that I lost can act as a support for you and for me to not make those mistakes ever again. Alright, so let's treat it like a fee that we pay to the market to learn some of the hardest lessons of trading. So make sure you make the most out of this video as well. So what used to happen was I used to stick to a 15-minute time frame or a 30-minute time frame and try to trade every big green and red candle. That is what most of the traders they usually do. Like every time there's a green candle, no matter if there's a strong resistance, they'll always buy. If there's a big red candle, they'll always sell. So as a beginner trader, I don't blame them, because that is how everyone gets started. But what changes you is your experience, and that is what I'm sharing with you guys here. So what I used to do was, let's say every time when we used to reach our volume area high level, as soon as I saw some random candle, I would have just went short. Let's say price started to go lower and I would have just went short here, a random SL targeting some random targets and giving back all the profits that I would have made throughout that particular week. But it's very important to wait for the confirmation. But more importantly, it was also important to understand that if the bigger time frame was aligning with the trade that I was going to take. We all know that trend is our friend, and in most of the cases it absolutely is. So make that trend a filter for you to enter and exit out of a trade. If you see a strong confirmation for a short and the market is bearish as well, definitely go for the trade. But if you see that there are no strong confirmation, there's no great market structure, there's no fixed trend, I would say it's fine. Even if the price is at one of your most important level, do not take the trade. It's fine. Let's let it go away. We'll take the next trade, because we are here to make money and not give it back. So what I started to do was I switched to weekly and daily time frame first. I used to mark my FRVP levels. I used to find out where is the maximum volume, where there are low volume nodes, which are the most important levels on the basis of volume. I used to mark them on my chart, and only then I used to come on the smaller time frame for trading and confirmations. And the last mistake that I made was overcomplicating the chart. Just because there is a high volume node does not mean that you have to mark literally every high volume node. So let's say I marked this, and then I've also marked this, and then I've also marked this, and then I would have also mark this. That is not how you were supposed to mark a high volume node or a low volume node. What you could have also done is basically just marked it as a zone. Keep it on your chart, and this way it's much cleaner rather than marking 10 or 15 or 100 different lines as a high volume node and a low volume node. So that is something which is very important as well, to not overcomplicate your charts. It's very important that you learn how to use FRVP tool, because if not, then you'll be pulling random FRVP levels. Randomly, you'll be placing them on a random trend or in a different range. And you'll be using at least 10 or 15 different FRVP profiles, because you are spotting the ranges and trends in a wrong way. So it's very important that you use maximum 2 to 3 different volume profiles and not more than that. That was basically the major fix that I could do for this particular problem. Now I've talked about my problems, I've talked about the solutions and everything about it. Let me do this as well, add a certain bonus to this video. Let me plan a particular trade, planning with FRVP, planning with different confluence, and how I would take the trade. Yeah, so let's get started with that as well. So here we are on the daily time frame. What we are going to do is we are going to mark our FRVP tool. So I'm going to consider this as the starting point of my range and consider this as the ending point. Now I have my levels of interest. I've got my volume area high, point of control, volume area low, and every high volume node, low volume node all sorted, right? So I'm going to mark this as a high volume node as well. Now what I'm going to do is I'm going to switch to a smaller time frame. So when I do this, I have my macro time frame volume area high level. I've got my macro time frame high volume nodes marked as well. Now what I'm going to do next is I'll just look at the price action. I will try to understand what is the trend of the market, and it's pretty clear that on the smaller time frame it's definitely an uptrend. So I'm talking about the internal market structure and not the macro market structure. So that we see that there is clearly uptrend. But what I can see is we've got our volume area high right around this area, and just below that we have an extremely great high volume node as well. So just look at this. What will happen if price reaches our zone of interest? We will be taking out some of the most important previous liquidity, some liquidity around this area as well. And if we dump inside this zone of our interest, we'll be taking out all of this liquidity. We'll be keeping the trend intact. And if we get to see some great confirmation, let's say our money flow is in our favor, the whole open interest is in our favor, CVD is in our favor, or any strategy that you guys use, probably something on price action, let's say a pin bar candle or whatever. If you get to see such kind of confirmation here, you can definitely plan a trade. And with that, you're not just using volume profile, you are using volume, you are using liquidity, you are using market structure. So this way, it will be the best possible trade for a continuation. In a scenario where the market has to reverse, you can again use your FRVP levels, try to find out the best area of reversals, align it with market structure, with liquidity, with volume, and then you can enter into a reversal trade as well. So that is how you plan your trade using FRVP. If you made these mistakes, don't feel bad. I paid the price for both of us. Now you know how to use volume profile in the best possible way. You've seen the mistakes, you've seen the applications, you've seen the solution to each of those mistakes as well. So if you can follow this perfectly, I can assure you that you're going to be making a lot of money from this market. And if you want me to go deeper in any of those mistakes, in any of the volume profiles or anything else, just comment down below and I'll make sure to answer them or probably cover them in the next video. Thank you so much for joining, and I'll see you all in the next one. Bye.